keeps going up because of that. Okay. So that's that. So yeah, so keep an eye on that. Natural gas, if this keeps going up, I think DBC keeps going up too. If DBC's negative now. It was positive right before I started, so it's still in an uptrend though. And as long as DBC is going up, I think that TIP TLT still has a very good chance of going up, which is going to put a headwind on risk assets. Okay, so risk assets. Let me pull that up. Right here. TIP TLT right here. Okay. We saw this pop up today. Okay. So generally, when this is going up, QQQ and the interest rate sensitive parts of the market don't do as well. We're seeing it go up. All right. Today, I think this is a temporary bounce in equity markets. Okay. So a lot of equities are up. It's still nowhere near did it regain all its losses from the last few sessions. Okay, it's just retracing a little bit. I think this is a dead cat. I think it goes up a little bit, and then it'll probably come back down. Let's see here. ES, same thing. We're up. Oh, that's interesting. I forgot about that line. Oh well, will it test it and then drop back down? That will reinforce this trend line right here. Not sure if that's going to happen or not. And then RTY, small caps. Small caps is the strongest of the sectors, or it's the strongest of the indices. It's something that we've anticipated around here in June, with all the washout in the Russell rebalance. So that is that's definitely interesting right here. Okay, so we'll see. We'll see if this retraces and how far it retraces. Speaking of which, I said that I would be exploring more of the moving averages, and I just wanted to share some of my other findings. And the more I study this, the more I'm going to be sharing with you guys, my findings. But one of the things I wanted to go over was the weekly chart. Okay. The weekly chart actually for the NASDAQ. The NASDAQ actually seems to be the index that, it's the index that really respects some of these moving averages the most. Okay, it just seems to have the cleanest, quote unquote, price action against these moving averages. Not all of them, but there's just certain ones that I noticed could be useful. There just tends to be certain macro activity. There just tends to be certain options activity that happens when this moving average gets triggered. Okay, so one of them is if you go on the weekly chart. Okay, on the daily chart, actually, let's go back to the daily chart. So yesterday I went over the 125-day average. I think as a daily moving average, the highest quality one that has the most response is the 125 for the NASDAQ for the daily. Okay, this one, there just always seems to be options activity, or right here there was a lot of call chasing in tech stocks, and it stopped miraculously right here. Okay. And so liquidity was also, liquidity was making a bearish divergence. Liquidity was falling off, and then this also turned down at the same time. It just happened. So all the macro data, the liquidity data, the options data, it all led to this point right here. Okay, so it just happened to be that the 125-day moving average is there. It just tends to be this one has a very high quality and high hit rate for that. All right, but if you look at the weekly chart, all right, on the weekly, 100, the 100 week is pretty high quality, and this one goes back all the way to the 80s. I'm not saying the markets now are anything like the 80s. It is very different. Options market is way bigger. I mean, the options market is about 10 times larger than what it was just even 10 years ago. So it's very different than what it is now, but it just seems to be that since the 80s, it's just been a very, very good spot to get a response. You know, we get a back test of the trend here of the 90s right here, right before the blow off top that happened in the next 2 years. All right. Right here, we had a downtrend. The downtrend came back and actually retested it here in December of 2000. And it retested it right there to the 100-week simple moving average. All right. I don't have any liquidity data like what we do with the junk bonds advanced decline line. I don't have that kind of data for this. We have it all the way from 2005. But we don't have it for anything before 2005. I don't think FINRA took that data. They didn't even record that data back then. So it's hard to measure what liquidity was. But I would imagine just from looking at certain limited quotes that I do have from this time, I do imagine that the liquidity was probably getting sapped. So when liquidity dries up, when liquidity is leaving risk assets, this line doesn't mean squat. Okay, it really doesn't. No moving average means squat when liquidity is leaving the market. Okay, that's one common feature that I found. Okay, but when it's being back tested, that's usually when you see, I believe, institutions dumping at that point. These are areas where institutions will take their trades. Most likely because this is a risk management area. They're probably using this as risk management. All right. Act on this line. If it gets over a certain line or closes 2 or 3 days, we get out. It's a good risk management tool, and I think maybe that's what it's being used for. I don't know. That part is a speculation. All right, but you cannot deny that over the years, over the decades, this line has produced certain results. Okay, and it even produced a result right here. It called the top. All right. So on the weekly chart, 100 is a very good long-term, a very good high-quality moving average. It's the 100 simple moving average on the weekly chart. Also on the weekly chart as well, the 9 EMA tends to be a very good short-term indicator for you day traders out there. Okay, I'm not a day trader, but I know some of you guys are. If momentum is locked into the market, let's say like, for example, downward momentum, that is a good place to re-enter toward the major trend. Okay, so from here, the major trend was down. And so every time we revisited that 9-week EMA, that was a good entry point. If you enter there, the stop would be to go on the daily chart. And then if it is over the 18-day moving average on the daily chart, then you can stop out. And also, too, if the 18-day moving average is sloping up by the time this hits, that's also your stop to get out. So you would have to switch between the weekly and the daily in order to see that. Actually, let's go ahead and do that right here. If you look at the NASDAQ daily, what was that date? Right here. This is where you would have gotten stopped out, March 2022. This is when, remember on the high-low line in March, this is when it started like flattening out and it started curling up above, the 2 started curling up above the 9-day moving average, and liquidity appeared as if it was improving, but it couldn't get over. It couldn't get over that 20-day moving average, and this is the big reason why we had that big put position, or at least I did, for put spreads for June, July, back in March and April. This was my tell that it was just a bear market rally, but liquidity was improving. And so when liquidity is improving, one important thing I want you guys to understand is that this resistance, this 9-week EMA, doesn't mean squat if liquidity is improving. It will bust over it. Okay, so when you're under a moving average and liquidity is drastically improving, that resistance doesn't mean anything. It really doesn't mean, it doesn't mean much. Okay, same thing on the way down. If you're over a moving average and you're on the way down and liquidity is leaving the market, that floor really doesn't mean anything. Okay, so it really all depends on that liquidity data too. So you have to use this after you look at your liquidity data and your macro data first. Okay, and then depending on that, then you can see, well, does this have a high probability of actually having that response or not? Okay, so the liquidity data was improving here, so boom, this resistance doesn't mean anything. And so then as far as the daily chart, when would you have taken your stop? So back in March right here, you were at, what was that number? 14,312. At 14,312, you would have taken that entry short at 14,312. So it would have been on this day right here. You would have taken it on literally on March 18th. All right, on that Monday. Oh no, it was a Friday. You would have taken it on a Friday, and then yeah, you would have gotten stopped out because it's curling up. I would say for this situation, because it was already curled up by the time you entered, you probably just want to stop out if it touches the 2 standard deviation Bollinger Band, okay, which happened 2 days later. All right, so you would have faced a small drawdown. All right, but that's for you leverage traders and your short-term traders out there. But for someone such as myself who does a little bit longer term trades, all I did actually was leg in to put spreads that were 3 to 6 months away, and I just kept legging in on the way up. And just managed my position sizes and kept my position sizes reasonable until we got a clearer signal that this was going to come back down. And that's what we got on the junk bonds AD line. Right here, we got our junk bonds on our junk bonds AD line back in March. We saw it curl back down. And make a divergence. And that's how we knew that we were still on the right side of the trade, at least in the 3 to 6 month. There's a possibility that there's still a very good possibility that we're going to be right. So that is what keeps us in the trade, is the data. Okay, so the data helps us enter, but if we're also wrong, we can also use the data to stay in the trade. And that positioning 3 to 6 months out and using spreads allows us to stay in the trade with very, very little drawdown. Okay, so I just want to just tie it all together. Moving averages is not everything. You have to use the data and everything else as well too. But again, that is a very compelling system to use. I might even start incorporating this myself into my plan a little bit more. But again, it always starts with the macro data, the options data, and then you can use your moving averages as certain targets or for certain risk management levels. Okay, so but it is quite useful. It does look like it's quite handy. Also, too, not just in down markets, but in up markets too. It seems to be a place where if it touches, it has a first response to go back up and upward momentum. So first response, boom, is to go back up in momentum markets. So it seems to be a good one right here, okay? Now, that's for you day traders and your short-term traders, or if you're trying to enter into a trade and use short-term entrances, like you're scaling into something. 26-week EMA is more of a medium-term trend. I think this one also, if you look back within about a year or so, it has very, very good responses. Very good responses. Okay? That's quite nice. It even when liquidity increased, if liquidity data didn't show that bullishness, like again from the high-low line, it didn't curl up. Our junk bonds AD line couldn't make a higher high. All right, and so our it couldn't get over the 26-week EMA. Same thing here. I mean, it overshot it a little bit. I mean, you have to understand with the dollar moving this much, with currencies moving this much, you have to expect some, overshooting and some random behavior around it. Okay, so it's not going to be like a clean, like, oh, it touches it and just like comes back. Most likely is none of these moving averages are going to be like that. Okay, but around that zone, you do see certain responses. Okay, and we are seeing that. Look, We are seeing that already. So I think definitely for this week, if it closes below this, then yeah, the medium-term trend of going back down definitely becomes stronger. Okay, I can see that. So I think this is a good one to use on your arsenal, especially for Nasdaq. The Nasdaq just seems to have good responses to these three indices. On the weekly chart, the S&P 500 actually does not have that clean of a response to most moving averages. Actually, for the S&P 500, it makes more sense to use the daily chart, to use the 50 and the 100. 50 and I'm sorry, 50 and 200. And that's what, everybody uses that, the 50 and the 200. What else did I find? I think, actually, and not just the 50 and the 200. And, besides the 50, I think another very good one for S&P 500 on the daily chart is the I'm just using it just for certain key levels. Certain key levels. And again, like here, the on the daily, so for you guys out there, the question was, do I use this as for crossovers? I don't. But I will explore that. But for now, I am not using this for any type of like crossovers. I'm just using it as for key levels. But for the S&P 500 daily, the 40-day EMA seems to be actually a little bit more quote unquote responsive, I guess, or the S&P 500 seems to be a little bit more responsive to the 40-day EMA than the 50-day SMA. So that's something that I've replaced my 50-day SMA with the 40 EMA. And just through different back tests, it just seems as if this is a better zone. And again, this acts as a resistance when you can't get improving liquidity data. Here too, we saw liquidity data improving, but it couldn't make that higher high. It couldn't make that bullish signal. Okay, back in June as well too. See, back in June, it curled up, but it couldn't get over that final moving average, and it still kept going down. Same thing with our junk bonds AD line back in June. It went up, but it couldn't make a higher high. And it just and then it actually made a divergence right here. It actually started going down before the market did by about 2 or 3 sessions. Okay, so that acted as the resistance at that point. So on the daily, so for SPX on the weekly chart, the 9-week EMA works decently as well too. But really, I think it's for if you're going to use moving averages as like risk management on the S&P 500 at least, I think the daily chart works best. Just through different back tests that I did, and it's 200 day SMA, 40-day EMA. Are pretty good. Okay, they're pretty good. And also too, the 9-day EMA for short-term trading, it just seems to be a very good spot for short-term bounces if you're like a day trader or something. So you can use the 9-day EMA for that. Those seem to be very good responsive zones, just from my analysis. Okay, but for the weekly chart, one thing I also wanted to show you was, and shame on me for not noticing this. Shame on me, because this is one of my tools that I use every day. The 2 standard deviation Bollinger Band around the 18-day moving average. So when you do a Bollinger Band, the factory setting comes at 20. So they use the 20-day SMA or 20 SMA. Instead of the 20, institutions use 18. Why do they use the 18 on the 2 standard deviation? I have no idea. But then on the 1 standard deviation, a lot of institutions use 20. So, I use the combination of both like this. All right. This is super responsive. Actually, shame on me for not seeing this, okay? And even back in June, remember how we said, we're not going to buy put spreads until we get to our certain levels. And remember that certain level on the daily chart, remember it was here. It was right here. I said right here, this is where we saw hedging demand. I said we saw hedging demand right here. I said, we should probably wait there and buy put spreads right there. Lo and behold, it gets to that level, all right? It's same thing with our NASDAQ. So it just happens to be, all right, it just so happens to be that all of our options analysis and all of our order flow analysis matched up to that 2 standard deviation Bollinger Band. So when we see our options data, our macro data all match up with these moving averages, I think that is a very, very it's very compelling then to use that as an entry signal or a risk management signal. Okay, it becomes very compelling. All right. So this works quite well. The 2 standard deviation Bollinger Band around the 18-week SMA works very well, actually. Even for momentum markets like 2017, the rolling bull market that we had, I mean, it just bounces off that 18-week moving average. And you just, you can scale out when it touches the 2 standard deviation upper Bollinger Band. Just scale out. That would have been good. That would have been a very good trading plan. Very simple. Very simple. And usually it's those strategies that are the simplest that are best. So I might keep this one in my arsenal too. And usually whatever works for the NASDAQ usually also works for ETH too, or cryptos. I noticed that as well. Ethereum. Not so much the Bollinger Bands, but actually the weekly moving averages work quite well for Ethereum too. Look at that. Of course, Ethereum's a smaller market, less liquid, so things may overshoot by a little bit. But that's pretty compelling. That's EMA 26, yes. EMA 26 on the weekly. SMA weekly 100, EMA 9 also on the weekly. They're just very responsive to that's just the ones I found. I backtested a few of them. So I backtested. It's really funny. The numbers 26 come up often, depending on the time period too. They change these EMAs. They change. This is in most recent, and also too, if you look back at certain time periods. Like in the 90s and so, it also worked very well. But there are certain parts, there are certain times when actually the numbers 28 and 24 EMA worked better. So I think based on maybe liquidity, and again, I don't have liquidity data that goes back to like the 2000s or so. I wish I did, but yeah, sometimes it's a 24. 24 came up often, especially on the triple Q. 24 and 28 came up often. Those were very sensitive areas. Sometimes because of the big movements in the market, it can make a difference. That difference between 24 and 26 can be a big difference, especially on the weekly chart. So, this is something that we're going to have to test just for every market. Every market is different. There's no exact 2 occurrences. So, this is something they will monitor and we'll keep using until it stops. When it stops using, we'll have to find what the new moving averages are or whatever that new thing is. But hey, for now, it seems to be working. So use it till it stops working. Okay. So I will incorporate some of this. But again, I think where it all comes from first is the liquidity data, junk bonds AD line, and the New York high-low line. Okay, those I think are paramount. These have to go along for the ride. Okay, so again, if you're on top of the moving average and you're coming down and liquidity is exiting the market, those moving averages are not going to be very good floors. Okay, same thing if you're below a moving average and you're moving up and liquidity is entering the market, those moving averages are not going to be very good ceilings. Okay, so it all depends on that. Okay, there's a lot of moving parts to this. So, but it is pretty compelling. Once you have an idea of what kind of market you're in, then it becomes easier to see what tools work best. Okay, so that's a good find. That was a good find. Hopefully, you guys can use that. Okay, so moving on. Tomorrow is Jackson Hole Summit. Okay, it starts the Jackson Hole Summit. It's Thursday, Friday, Saturday event. We may be seeing some announcements from Powell and crew. Maybe even some announcements from the other heads of central banks. We'll see. Hedge funds are reportedly making increased sized bets on tech stocks. We have been seeing a lot of options buying in both on the call and put side on big sentiment driven names like Tesla, Apple. Apple's not really sentiment driven, but it can. A lot of hedge funds like to speculate on it. Amazon, all these big tech names are getting lots of options activity because of that. So premiums are elevated. So keep that in mind as you guys trade short term, and I know some of you guys are day traders out there. So keep that in mind as you day trade. Just monitor your IV. Speaking of which, what are people chattering about on Reddit? Let's see what's going on here. Bed Bath & Beyond still in the news. RC, GME, Tesla making it too. So, yep, these are the names that are being talked about right now on Reddit as of 15 minutes ago. So, there's your list for Reddit right there too. Okay. Commodities. Let's take a look at some of the commodities. I do think commodities are pushing up. No more of these. I don't need this for commodities chart. So for commodities, in the morning, we did see grains go up. They're coming back up. So grains are just going up and down. Oh, wow. That's a huge move. Oh, no, that's the weekly. Hold on. Okay. So, yeah, it was actually down right before I started, and now it's coming back up. So grains going back up, pushing DBC up as well, natural gas, of course, and crude, keeping that up as well. Ooh, crude is part of our plan. Remember, guys, how I said if we make a higher high, that's the last high right here. What is that line at? 94.34. So if we get a close above 94.34 today, that would create a higher high on a closing basis. So then the next pullback, if today we close over 94.34, okay, and then we pull back and we make a higher low, that will be my entry for calls on USO or on the crude oil futures contract, okay? So that is in play, all right? DBC going up puts TIP, TLT up. I think, again, for US indices, this is a dead cat bounce. But we shall see. The high-low line, the advanced decline line made a little bit of an up to yesterday, up move. We'll see if it continues. I think if we see a little bit of volatility, especially with Jackson Hole, with all the announcements and everything, or news releases, this could go down. And if that goes down, we're going to continue this bear market, especially if it goes below this level. If it goes below this level right here, there's 40,760 right here of the June 7th highs. I mean, yeah, bear market continues. This is nothing more than just a bear market rally, all right? And then the Moab signal may be far off, maybe further off than expected, okay? So we'll keep an eye on that. Interest rate spreads. ZF going down. Again, when this goes down, dash for cash. When this goes up, cash is trash. Let's see what the dollar is doing today. Is the dollar up? We saw some selling pressure in the dollar. I think that was just merely some profit taking. I don't think that is too big of a move in the dollar. Where is my dollar chart? Oh yeah, dollar is up now. It was down for the day earlier, but now it's up. So maybe we're seeing a little dash for cash. Yields are further inverting. All right. Oh, one thing, guys. The odds for a September hike are increasing for 75 basis points. Remember how we were trading 50-50 or 60-40, 55-45, back and forth? I'm just updating it to see if there's any updates in the last couple minutes here. No, okay. So, yeah, we were trading off here, but now it looks like we're now swinging in the favor of a 75 basis point rate hike for September. Now we're also pricing in a November 50 basis point rate hike, and the increased chance no, I'm sorry, a 25 basis point rate hike in November after a 75 basis point rate hike in September, with the possibility of the November rate hike being 50 basis points. That one is increasing right now. Yeah, it was a week ago. It was only at 21%. Now it's at close to 40. All right. In December, it looks like we're having a chance of another 25 basis point rate hike in December. February, remember how we were supposed to pause in February? Well, it doesn't look like it. It looks like February now, the bond market is pricing in another 25 basis point rate hike. Actually, that one is equal to the chance of them pausing in February. So now they're kind of neck and neck. And then in March, we pause. But again, another rate hike for March, that one is increasing. It was last week, it was at 13%. Now it's at 21%. So as you can see here, the common theme here in all of this is the market is pricing in a more hawkish Fed. Okay. We don't even get a possibility of a rate cut until July. And even then it's neck and neck with not getting a rate cut in July. Okay. So again, now the market is pricing in a more hawkish Fed. Most likely, and again, I keep telling you guys this, TIP TLT. Really, I mean, you guys, we got to keep an eye on TIP TLT. That one, TIP TLT is going to tell us. Okay. Because it's telling the bond market. This is telling the Fed. The Fed, I know the Fed looks at this chart. Okay. And as this goes up, that gives them more, I guess, that gives them more of an order to put hike interest rates higher. Okay, if the market is telling them that inflation is going to go up like this, that gives them the free rein to hike rates faster. Okay, so maybe that's what we're seeing, and I think the market is also pricing in that we're going to have a slowdown because of it, and I think the market is pricing in that more and more as time passes, because again, liquidity data is just going out. Liquidity is coming down. Even yesterday, I think HYG was up, but advances over or declines were over advances. We still had a negative number. Declines were over advances on junk bonds, even though HYG was up. So we're starting to see that divergence. Liquidity is leaving the market right now slowly. Okay, usually this happens slowly and then all at once. So we'll see. And I think a lot of that has to do with the expectations for higher energy costs. Tying it back into current events here. Europe actually. About 40% of fertilizer production in Europe has been curtailed because of high energy costs. So we're actually seeing certain stocks doing really well because of this. On this news, MOS, we talked about MOS before, Mosaic, it's the fertilizer company. Boom, look at that, last 3 days. So after Europe, this news came out, all your fertilizer companies went up. LXU, I know you guys like LXU too. Some of you guys are still in it. This is up as well. And so as natural gas prices keep going up, I think we keep seeing these MOS, LXU, these kind of like crop stocks are going to keep going up on this. Oh, look at this. The market's turning down. Maybe this is the Frankfurt fade. We were talking about the possibility of this. The Frankfurt fade right here. Looks like we're getting it. Very good. We'll see. So there's that. What else was I going to talk about today? Okay. Let's get to Bitcoin. Okay. Let's get to the cryptocurrencies. Some very interesting trade orders. One of our members likes to call this guy the 10,000 ETH guy, BZ. I know you like to give him that name. I'm not sure if it's one person or not, but we are seeing. At least last night we saw a lot of somebody bought that butterfly spread. I think in those. In that range. I think it was like 15,000 though was the range that they bought. Oh, and by the way, one new thing about Deribit, they opened up this combo trades. They actually show you now a breakdown of how things were bought, like for combo block trades. So, was it a call spread? Was it a put spread? Was it a iron condor? Was it whatever? It actually breaks it down for you. Now, here's the thing. They say contracts and they say trades. I don't know what the difference is between the two, but the pie chart is different. I don't know if one of our overseas friends can, with an account, maybe they have a user manual for account holders. I can't find anything on their website that says what the difference is between the two. If I had to guess, maybe this is the, I don't know, actually, because I thought maybe this was block versus retail, but now it has block trades right here. No. This is calls bought or sold. So, okay, so this is probably, so I don't know if contracts means this is like block trades and this is regular screen trades. It could be because those ratios and those are usually in higher quantities. These are usually block trades. So maybe this is a block trade right here. I am not sure. Okay. I'm not sure. Trades. Okay. So that's pretty interesting. I'd like to just know what the definitions are before I really start making any conclusions. But that's really nice. That's pretty handy. Anyway, so where are we seeing a lot of volume? Now, after we saw that huge March order, we saw lots of volume coming in on the September and August contracts. I do think that the September 5,000 calls for September 30th, I think those are calls sold. Let's take a look. Now, I don't have I wasn't able to check the trade orders to see what they were, but let's see if they show up in the block trades. 3,000. Oh, wow. These are some big dollar amounts. So that one is a buy. So people are hedging, looks like. That's definitely, it looks like that's a hedge. 1026.06, 1026.06. It was done at the same time. What is this? You buy a 1400 put, you sell. So that's a put spread, put vertical debit, and you sold some calls. Interesting. So you sold some calls to pay for a put debit spread, a risk reversal spread. That's a risk reversal spread on the downside. So somebody's selling some calls and using that premium to buy some put spreads. 1026.06. No more for 1026.06. Yeah, that's what it looks like. So hedging happening. Hedging for the downside. All right, there we go. Hedging for the downside. Probably because of Jackson Hole. Coming up. They're worried that, because if a hawkish message comes out, risk assets are going to take a hit. Okay, it is what it is. Actually, let me see. What strikes did they sell? What was that? What strikes? 1,400, 1,000, 1026.06, 2,000 calls. So for September 2000. Okay. September 2000. Okay, so it's all in the September chain. Are there any big August orders? I didn't see any big August orders. So that August must be retail. Remember those August numbers we saw? That must be retail. Of course, 1,800 calls. I mean, come on. That screams retail. That screams retail. Yeah, okay, retail chasing on that? Fine, whatever. I don't care what retail chases. So that means probably not going to happen. I mean, who knows, right? Maybe they're right. Sometimes retail gets it right. Let's see. But September 30th seems to be where we're seeing a lot of the big boys trade. Deribit never saves your. Let's take a look. The big boys. What delta are they going at? Delta 25. Huh. Okay. Okay. This is a cheap hedge. 25. So what? What are they spending? 100 to 180 bucks. 80 bucks for 400 points. Okay. That's not bad. That's not bad. That's not a bad risk to reward as a hedge, and they're selling the 2,000 calls, 102. So wow. So $102. Are they getting paid to take this trade? Yeah, they're getting paid. So they're selling it for They're selling this for $100, around in dollar terms. They're selling it for $100, and then they're buying the spread for 80. A little under 80. Let's say 80. So they're collecting $20 per spread for a possibility of getting a large payout if it drops. Not bad. Not bad. That's not bad. It's net credit. They're doing this at a net credit. Good for you, whoever you are. Good for you. Okay. That's a good trade. Not bad. A risk reversal trade. Not bad. Not bad at all. So that's very interesting. So we're seeing some hedging on September 30th. So that, I think the merge is happening that first or second week, right? The merge is going to happen. We got Jackson Hole coming up. And we got a big Fed meeting coming up with interest rates, with right now being a 50-50 toss-up between if it's going to be 75 basis points or 50 basis points. So yeah, I can see why there is a need to hedge. And if you also look at the SPX and a lot of the tech names, we're also seeing large OI in the September contract all across the board in a lot of different stocks out there. So maybe tomorrow, what is today? Is today? Today is Wednesday, right? Yes, it is. So tomorrow, maybe I go over that. Maybe we'll go over options on the indices, as well as the big stocks, as well as a thorough review of the crypto options as well. So we'll go through all of that tomorrow, okay? I just noticed that in the beginning, I did not hit the record button. So the first 5 minutes are blank on the video. So just a recap. On the first 5 minutes, we were talking about uranium. All right. All of our uranium stocks, CCJ, UUUU, all of them are up on news that Japan is going to increase their nuclear power capabilities, and that sent all of our stocks up. Now, remember back in June, we had a plan. I said that governments are going to start getting more friendly toward uranium because of the high fossil fuel prices, and lo and behold, that's what happens. Now, there's one thing being right, and there's another making money off of what you know. We did not make any money off of this because, we didn't buy shares. We were waiting for higher levels. That's the price you pay for getting good entries. You miss out on certain trades. It is what it is. I still will add UUU to the plan, but I just wanted to give you guys an update on uranium. I know a lot of you guys follow commodities, so I just wanted to make sure you guys heard that. And that's why this video, you're gonna hear this weird start and weird pause in the beginning, just because the first 5 minutes I did not hit the volume button. So I just wanted to go over that. That's what we talked about in the first 5 minutes, just in case. Any questions? I want to open it up to any questions, concerns, anything you guys want to see. Sure. Trading. Okay. Are you okay with your voice being heard? Okay. All right then. All right. I'll open it up now. Your voice is going to be on the recording as well. What do you want to see?
So pull up ETH-USD on the 15-minute chart.
ETH USD. Oh, you use the 15-minute? Dang.
This is for day trading
Day
purposes.
trading.
If,
Gotcha. Day
if I
trading.
was going to make any plan, I don't do anything lower than the one daily chart.
Gotcha. Okay. Good man. Um, and you want to overlay it with.
RTY.
Do you okay? Instead of RTY, are you okay with just using the RUT, the actual cash index?
We can
No, because you
try
need
it.
no, because you need the 15-minute. The RUT doesn't have it
Right.
doesn't trade overnight. I see. The reason why the reason why I say that is just because of the contract rolling. There's a little bit of a decay.
I use the Capital Com one.
Which one? Oh,
The
you use the
Capital
Capital
Com
Com one?
one. Yeah.
Okay. Why, if I may ask?
It overlays better on the chart
I see.
for some reason.
Okay. Huh. I don't know why. Oh, it's because I put the slash mark on accident. Okay.
All right. Would you mind changing it to bar pattern? It's not completely necessary, but that is how I use it.
Bar?
Yeah. And I would say try to focus on like 9:45 today.
9 Eastern time, right?
Yes, 9:45 a.m.
9:45. Good man, Eastern time. Okay.
At about 9:45, there was a big futures candle increasing. It went over the previous high of the morning. At the same time, ETH was going down. When I see something like this, it's usually a divergence. I would say 85 to 90% of the time in the past few months, it has followed. So at that time exactly is when I called it out, and you could see we've been up since then.
Nice. Nice
And
use
I do
of
the same
this.
thing in reverse.
I remember you and I, we talked about this back in June. Everybody on Twitter was saying that this was tracking the NASDAQ, but you and I, we knew that it was tracking small caps better. So it's good use of that. Very good. I like this. So for you day traders out there, there you go. There's your day trade signal right there in crypto.
And it has not failed me yet. Just use a tight stop, you'll be fine. And I also do use Bollinger Bands. Doesn't work as great on ETH, but it just gives me a kind of an idea of where we're at.
Yeah, for ETH, for Bollinger Bands, if it's going to work, usually it's going to be on your weekly chart.
Yeah.
Yeah. And it just work. Actually, this works really well. The 18-day weekly, 18-week the 2 standard deviation Bollinger Band, it just works really well. And it
What I use
happens.
it for on the 15-minute is that when it's very tight, I
Yeah.
feel there's going to be a big move coming next.
Yeah, so tightening of Bollinger Bands generally means that there's expectation for volatility to increase. But yeah, but the weekly chart, it works really well. And yeah, but on the 15-minute, I agree. So a lot of these indicators don't really work well on smaller time frames, just because it's more random, you know. But I like this. I like the simplicity of your day trading plan, though. I like how you just compare it to one index. You see, look for divergences, and then you just go and put tight stops. And if it works, it works. If not, you put a tight stop. You lose very little, and you move on. That sounds like a very, very good risk management. Very good. I like that. It's very simple. Very good plan. If I had time in front of my computer screen, I would attempt this. But I'm not always in front of my screen, believe it or not. So I tend to like longer moves, weekly, monthly moves. But anyway, very good. Hey, MSC, thank you so much for sharing this with us.
No problem.
Very nice. Anybody else want to take a look at anything else before I do our end of day review? Maybe we do that part tomorrow. Nunya, I see your question there. Maybe we incorporate that tomorrow. Okay, or maybe this weekend. I have some time this weekend, so if you guys want to do a session like over the weekend or on Friday, or maybe we can do it Friday. Yeah, We'll devote a session to crypto since there seems to be a lot of interest in crypto. We'll devote a day to it. How about that? Okay, we'll do it on Friday or something. All right, then. In that case, if there are no more questions, comments, rude remarks, let's get on to tradition. It is tradition here at High Noon Highlights. At the end of the day, I like to go over all of our current positions, current indicators, and the trade plan that we have for the upcoming market movements. Okay, so first things first, as always, let me go over the indicators that are most important, okay? New York high low line coming back down. We haven't seen it go over the 20-day moving average. It hasn't made any type of, it made one slight bullish indication or whatever, bullish price action, whatever you want to call this. But it wasn't a full bullish move, okay? It didn't get over, it didn't curve up all the way. It didn't get over the 20-day moving average on the New York high-low line cumulative. Now it's coming back down. If it goes below the August lows right here, then bear market continues. Okay, that rolling bull market that I was talking about happens later then. Okay, or if at all, maybe not even at all if this goes down to this. Okay, so we will reassess. If this comes back down, we will have to reassess our 3 to 6 month outlook on what is going on. Okay, I'm adding this to our indicators as well. SPXEW, which is the equal weighted S&P 500. If it loses the 50-day moving average, I think there's going to be increased selling. Selling begets, I think in this market, selling begets more selling. There's a lot of negative delta positioning by the markets and by dealers, meaning that as prices come down, dealers will have to sell more of the underlying as those deltas increase on those negative delta positions. So as weakness comes into the market, it will further fuel more weakness because of that gamma positioning. So keep that in mind. That's where this is coming from. All right. As always, TIP TLT moving up. Okay. We are seeing TIP TLT moving up. Inflation expectations are going up because we are seeing commodity prices go up. DBC is up. Not as much as it was earlier today, but it is now recovering its losses. We are seeing energy, especially crude and natural gas, up as well. And most of the grains are up. Wheat being the strongest of the day. Corn still making its higher high right here. All right. So DBC, all those, is pushing TIP TLT expectations up. TNX, which is the 10-year treasury rate, is going up. So this is all headwinds for growth stocks. Growth stocks don't do well when interest rates go up, okay, and when liquidity tightens. Okay, so those are the indicators we're looking at. Dollar, another indicator that we're looking at. Dollar is strong today. It started out a little bit lower in early trade, but then it started going up again. So dollar's going up. Euro coming down. This is a risk-on currency. It is coming down. Australian dollar also is teetering between that 6903. Remember that 6903 pivot? It just keeps going up and down through up and down. You know, passing that pivot. I think a lot of traders are waiting for Jackson Hole. A lot of them are waiting for some sort of response, some sort of message from central bankers. So we'll see. We'll see what happens. Okay. So those are the indicators. Oh, ZF, guys. Again, you know, I think as long as ZF, our 5-year bond is going down, the 5-year treasury bond is going down, as long as yields keep further inverting, there's going to be a dash for cash. Cash is going to be a good alternative to risk assets. Okay, that TINA, there is no alternative. That is no more. When the yields invert like that, when dollar is on an uptrend, there is an alternative. It's called keeping cash. So that is, of course, headwinds for equities as well. So let's get to our plan. Nothing has changed really. Day to day, as you have probably noticed, I don't really change my plans day to day. I'm not in front of my screen all the time. You know, I don't, you know, that just my opinion. I don't like being in front of my screen and getting abused by 1 minute candles every day. That's just not me, all right? I like to look for bigger trends, and I like to do stuff during the day. I'm sure a lot of you who work during the day, I think you guys probably share the same sentiment. You guys want to be able to, gain financial freedom by, having good gains in the market, but you don't want to be stuck in front of your computer all day. Looking at those bigger trends works. And so, sometimes you got to be patient for that. Bitcoin USD, we're still waiting on that Bitcoin to gold ratio to get to that red line that we have that started back in 2017, that trend line, upward trend line. Okay, still waiting on that. ETH, same thing, trend line from the 2020 lows. ETH to gold ratio, we're still waiting on that to come down to the red line to buy in as well. All right. And I'm adding UUUU and all those uranium names. I mean, they were always part of the plan, but it was running away so much that I thought, oh man, we're never going to get there. And I thought actually recently, even just last week, I was checking and it was coming down. So I said, maybe this week, next week, I reintroduce UUU back into our plan again because it's getting closer to our buy levels. Boom. This Japan news comes out with the power plants. They're going to try to increase their nuclear capabilities for power because of high energy costs. And it sends all uranium names up. I do still think there's going to be one big drawdown in the market. And when it does, if it gets to around let's say mid fives, I think I'm going to start buying. So UUUU, part of the plan, we're going to start buying mid fives right here, okay? Mid to high fives, all right? So that's part of the plan. I think uranium, more and more governments are going to get friendly towards it. We've been saying that since June. We saw that coming in June. Shame on me for not jumping then. I was too scared to go in. I wanted lower prices, too greedy. Okay, so it is what it is. That's life, that's trading, but part of the plan. HUT, I'm still in those covered calls. I'm still going to keep buying more when it gets to that 165 zone in HUT. Ford, I still want to get a crack at Ford. If we can only get to that 1380 zone, that would be wonderful. We'll see. We'll see if we can get there, okay? So Ford, still part of the plan. What else is part of the plan here? SPY and all those names, indices, same thing. We're waiting on that MOAB signal, right? We're waiting on that MOAB signal. And what is that MOAB signal? It's going to be New York high-low line. It's got to curve up over that 20-day moving average, and it's got to make a higher low, okay? That plus our junk bonds AD line, if it can make a higher high and make a divergence with prices, that plus the New York high-low line would make a combo MOAB signal. Mother of all, buy the dips, okay? So that's when I really want to buy the dip with size once I get that, once our indicators tell us to do so. But until then, we remain patient. I do think, however, that MOAB signal is probably going to start forming right around that 360 zone if we were to sell off. And so I may start buying some shares at 360, although I will wait for the bigger buy purchases for long-term shares at 345, 342 or so, 342, 345 zone. And when we get that MOAB signal, which I think, at the lowest, it will probably be around that 340 zone, I will be buying 1 year out in the money calls as well. Okay, so that hasn't changed. Although now I'm also looking at the S&P 500, the Russell 2000. The Russell 2000 is a really strong index right now, especially after the rebalance happened in June. If we see a meaningful pullback and we see the MOAB signal, maybe instead of the in-the-money calls on SPY, I may buy it on the Russell 2000, either on the RUT or IWM. IWM is the ETF of the Russell 2000. So one or the other, or I might just buy it directly on the cash index on the RUT. Okay, so I'm adding that to the plan. What else is in the plan? Tesla's in the news. Tesla plan is still there. I short at this red line. People laughed at me saying that, we're never going to get there. We're never going to get there. I said we were going to get there around here. Okay, around here, I said I'm going to short here. People laughed at me. Now people aren't laughing anymore. That's definitely a possibility. I mean, it's already gone up about 40%. What's another 10%? What's another 10%? It could. So if it gets there, I short. What else is part of the plan? Crude oil. Crude oil part of the plan. Again, we are waiting to see. I want it to close above this right here. Okay, I want to see it close above this level right here, and if it does, if it closes above this high right here, then it made a higher high on closing basis. Then I want to see it pull back, make a higher low, and that's where I go long on crude oil. Okay, I'm gonna go long with call vertical spreads on the actual futures contract itself, or I may use USO, whichever gives me the greater call skew, the call forward skew. Whichever gives me the greater skew, I'm gonna go with that. So I'll let you guys know when that time comes. We won't know until it makes that, if it even makes that lower low. So there's no point in looking at the skew now. I will sell when we get to around 115 to 118 zone. That's where I'm going to take profit on those call vertical spreads. And then when it gets to 120, I'm going to buy put vertical spreads all for the way down. Okay. So I think it's going to be stuck between these two levels probably for the rest of the year. Okay. So I'm going to play both sides. All right. That's my crude plan. And then gold. Gold. I'm still waiting, being patient. I think this is a dead cat bounce. I think we still get to these lows of 1680 or so. I will buy call vertical spreads either on GLD ETF or on the actual gold contract itself. Okay, I will buy it there. All right. So that's my current plan. Let's run through the positions I have. As always, ARC. I still have those lottos. They're underwater. I bought them for 9 cents. They're at 4 or 5 cents. I still got 2 or 3 days left on them. Whatever. We'll see. I put a small order in. I only got a partial fill on a small order. So it really is meaningless. But, I mean, it's fun to watch, I guess. Dow Jones Industrial Average, we still are in the same spreads. A 300, 290 October spreads. Vertical debits. EWT, which is Taiwan, we're still in those December put spreads, the 49.40 put verticals. FEZ, Eurozone stocks, we're still in the same spreads. November 32.27 put vertical debit spreads. HUT, I'm still in HUT shares. I've covered calls for January, then the $5 calls. What else? IWM. I'm still in IWM as well. November, 180, 170 put vertical spreads. Same strikes on the October chain as well too. Nothing has changed. QQQ, I'm still in my QQQ spreads. For November, I'm still in the 305, 295 put verticals. And of course UVXY, still in those two spreads in December, 1424s and the 1520 call vertical spreads on those. Okay, so that is my that's trading positions, indicators, trading plan. Boom, checkmate trading. Any questions, comments, rude remarks? Going once, going twice. Okay, sold. All right, in that case, guys, I'll be back later on today. As always, I'll keep the Twitch stream up so that you can look at the charts and data that I'm looking at throughout the day. I'll try to be back before market close today. We'll have another high noon highlights tomorrow at noon Eastern time, as always, every Tuesday, Wednesday, Thursday. And then later this week, let's try to plan on that. We'll have a crypto session where MSC, maybe you can explain to us and to the audience the ETH event that is coming up, and perhaps on the same presentation we'll also take a look at options positioning for ETH and for Bitcoin in the same presentation. So we'll coordinate and we'll let you guys know when we do that. All right, have a wonderful day, guys.